Hey, it's Dan. Welcome back. You're watching iAllegedly, and I've got a good one for you today because we've got 2 tax credits that could be worth over $6,000 each, and we've also got 10 deductions for self-employed people that I just want to remind everybody about. And before I get into it, please take a moment to like this video. Please hit the subscribe button, bell notifications so you get notified of everything that we're working on. Join our Patreon channel. And also, please join the email list too. So let's get into it. There is a tax credit called the Earned Income Tax Credit. It can give you $538 if you have no kids. And based on the number of children, you can get up to $6,600 in tax credits if you have 3 children. Okay? This is amazing because this is not claimed on people's taxes every year. And being self-employed and having a challenging year like 2020, you need to be able to claim every possibility that you can. So this is something that people have not been taking advantage of in years past, and you should look at and see if you qualify for this. There's almost 2 million people that have not used this deduction in the past, this tax credit. And in previous years, up to $7 billion was left on the table of people that didn't take advantage of this. So ask your tax preparer if the Earned Income Tax Credit is something that you'd qualify for and see if you could be eligible for it. The next one is the Qualified Family Leave Credit. If you have children and they couldn't attend school or go to their daycare, you could get up to $200 a day for 50 days. It's based on your income. 2/3 of your income up to a maximum of 50 days. So to give you an example, let's just use round numbers. Let's say you make $200 a day. Well, that means that you could get 2/3 of that or $132 a day that you could get for up to 50 days, which would give you $6,600 in a tax credit. And this is not just a deduction. This is a full-blown tax credit that you can use Form 7202, and you can get a full deduction if you had a mandatory shutdown, if you had your facility your kids couldn't go to school at. You know, when my kids were in school, we had a great daycare facility, and it would have crippled us if I couldn't have sent my kids there. So that's what this is for. This is from the Family First Coronavirus Relief Act and the CARES Act, the first stimulus package. This has eligible dates from April 1st, 2020 through the end of 2020, December 31st. It's based on 260 days of your income, self-employed income. If you work for somebody else under the Family and Medical Leave Act, you've got access to, paid time off and things like that. Most people do that work for somebody else, but being self-employed, it's nice to have benefits like this. And also this, tell your accountant they'll use Form 7202 for this. You can take a look at the form right here. And share it with your accountant if he's not familiar with that, but I'm sure by the time tax time rolls around, they will be super familiar with this. But take a look. Now, one thing that you may or may not know is that the IRS has on its website access to all these forms. And Form 7202 is the credit for sick leave and family leave for certain self-employed individuals. It's got all the details about this programs. And, if your accountant's not familiar with, he should be, they should be, and let them know about this. But it's got all the different details. It can answer any recent developments on it and has access to the form itself, which is pretty cool. So great reference. Hopefully this will help a lot of you out. Good luck to everybody that uses this. I want to remind everybody about the qualified paid sick leave also. If you're self-employed and you were part of a mandatory shutdown, couldn't work, you could claim up to 10 days of your income as a tax credit, up to $511 a day for 10 days in tax credits. Take a look at this previous video. The link will be above, and we can go through that, but that was just absolutely amazing. Basically sick pay if you had the virus, if you had to take care of somebody, if you were on a mandatory lockdown and couldn't work. A lot of cool things. Again, I am not a tax professional. Please talk to a tax professional, but these are deductions and tax credits that you should take advantage of immediately when you file your 2020 tax return. Now, the next thing is the 10 deductions for the self-employed that I want to get into. These 10 suggestions are deductions that you should use as a self-employed person. 2020 was a very challenging year for everybody. People had to move their business into the house. They had to make all these different changes. They didn't work the same way that they did in years past. So first things first is the home office deduction. This is something that has been complicated in years past. But again, if you moved your business home, you have to have a dedicated workspace. You just can't have a card table on the side of the room and say, that's my workspace and I'm going to deduct the whole building. It doesn't work that way. You've got to have a designated office or area set up that's specifically for your home office use. It can be up to 300 square feet. You can deduct certain things like the mortgage interest, the utilities, certain costs of it, but you have a basic percentage that you can use. The IRS has a deduction, simplified options they call it. But again, talk to your accountant and find out if that is for you. Think about internet and phone bills. You've got all this new internet usage. You've got, did you have to upgrade your plan because you were there and everybody's working from the house? Well, that's a deduction right there. The phone, did you add another phone line? Things like that are all deductible for your business. Health insurance premiums are deductible for self-employed, okay? As long as you're not participating in your spouse's plan, you can deduct your health insurance, and long-term care premiums are also deductible. You can also deduct premiums that you paid for coverage for your spouse, okay, if you're self-employed, and children that are 27 and younger. Crazy, but if you're paying for their insurance also and you're self-employed, that's deductible. Meals are 100% tax deductible based on entertainment. So if you have that deduction and you entertain during this time, you can use that as a deduction for your self-employed taxes. I wanted to make suggestions that weren't just the obvious ones like advertising and things like that. So there's vehicle expenses. Do you use your car for your job? Okay, those expenses can be deducted for somebody self-employed. Right now in 2020, you can deduct 57.5 cents per mile for your deductions for your car usage for work. Okay, in 2021, it drops down to 56 cents per mile. And publications, subscriptions, any cost, magazine, journal, books directly related to your business is tax deductible. Very cool, but think about, what you've had to buy this year that you wouldn't have had to buy in previous years. It may ring some bells. Education. Any education expense that's directly related to your business is tax deductible. Now, cost of classes to prepare a new line of work is not a deduction. If you're a real estate consultant taking a course, for example, real estate investment analysis, that would be deductible. But if you want to take a class on cooking, that would not be deductible. Okay? Business insurance. Do you pay premiums for insurance to protect your business, such as fire insurance, credit insurance, car insurance on the business vehicle, or business liability insurance? Things like that are clearly deductible. Your startup costs. The IRS usually wants you to deduct these over a longer period of time, but you can deduct up to $5,000 in business startup costs from your 2020 taxes. And think about this. This would be, potential locations, business travel for that, advertising, attorney's fees, accounting fees on setting up, the new entity. Professional fees like accounting fees and attorney's fees, things like that are always deductible. But you don't think about that when you're starting a new venture and what you've paid as far as experts and consultants and things like that to get your new venture going. That's deductible. What about new equipment? Did you have to buy any computers, new phones, new printers, Things like that that are deductible, plus office supplies. You know, you moved everything in the house. What new supplies did you have to buy? All of that is deductible. I can't resist. I got to throw a couple more in. Did you upgrade your website? Did you do any new advertising, any Facebook ads, anything different? Did you do any printing, any contracts, anything different that you've had to do? Did you upgrade software? Anything new that you didn't have in 2019 that you had to buy for the business in 2020? Think of things like that, because those are deductions for self-employed. We seem to forget what we spend throughout the year sometimes. And again, the year was so challenging that hopefully this will spur your memory and you're keeping good records anyways. But just a few more suggestions for you. Thank you for watching. Please don't forget to like this video, subscribe, share it with your friends and colleagues, and let me know if there's anything that you can think of that I forgot. Again, the obvious ones. I tried to come up with things that were different, things that you don't think about all the time. I will see you soon. Don't forget to join our Patreon channel if that interests you, and our email list, and I will see you guys very soon.